Absolutely it is. I think that actually quite a lot of optimism around the trade deal has already been priced in. I think that people assume that we will have good news from here. And that's something that will be good for the Chinese and also, of course, for Americans. Now, over the longer run, what we want to see is how China and the US learn to deal with one another. The issue of IP and of technology isn't going to go away. In the meantime, what we need to do is find the Chinese companies with the right earnings growth and the right business models. And there's plenty of opportunity there in the onshore market.
And in terms of that growth sustainability coming out of China, are we going to see that improving?
I think that sustainability would improve, but please don't confuse sustainability with the actual level of growth. As China gets more prosperous, it's entirely natural that the growth rate in any given year will start to slow down. What the policymakers have been so focused on over the last couple of years is the quality of that growth, the longer-term sustainability of that growth. And that actually sets us up for quite a nice picture, because we want to find these growth franchises within the corporate sector in China, rather than focusing on the sort of the lower quality cyclical assets, which maybe people have been investing in the past.
We, of course, get the China GDP number out this week. Could that be a negative event risk for markets, given that we've, of course, been placing so much emphasis on this China data of late? Yes, we've seen some improvements with the PMIs and the manufacturing data, but if we see a print to the downside when it comes to GDP, could that be a catalyst to move markets lower, do you think?
Well, this number, by definition, is a backward-looking number. And there's no doubt that Chinese companies and other companies around North Asia and elsewhere cut back on their capex in the second half of last year because of concerns around trade tension and associated factors. What we're looking for now, and the reason that accommodation is important, is what will happen over the next 9, 12, 18 months. So this GDP number is much less important than what we're going to see over the next few months. And already we think we've seen some bottoming out of earnings, some bottoming out of activity, with room for improvement from here.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.